Good afternoon, ladies and gentlemen, and welcome to this week's live trading session and trade review session. We've had the Bank of England raise interest rates by 50 basis points today. Some of you have been asking me questions in relation to why sterling didn't rally on that news. In fact, it's down about 80 pips. And there can be a number of factors. So number one, obviously at the moment the perception would be, and the fact is, that the Fed is more aggressive than the Bank of England. They're more aggressive than the ECB. So the dollar is always going to be stronger against those two unless something exceptional happens, and by exceptional I mean an interest rate increase that was bigger than what the market was anticipating. So the market was anticipating 50 basis points. That's what it got. And it sold off on the news. This morning, from memory, I think sterling was, I'll bring sterling up just as we're talking about it. So this morning, I'm just going to bring, this is a 1 minute chart. So I think early this morning, sterling was trading around 121.30, 121.40. Then we've had this rally up towards 122 even. It did go just above that number. You can see here on this big red candlestick. Then you've got the news. You've got the big sell-off, and then the market has eventually found some support around 120.70. I bought at 120.89, and then we've rallied back up to the levels that we're seeing now, but still very far away from the levels that we saw earlier this morning, and certainly from the levels that we saw prior to the announcement. But you can see the effect that the announcement had there with those 1, 2, 3, 4 candlesticks with probably over a 120, 130 pip move at that particular stage. I just did mean to say at the beginning, if you do have any questions about any of the trades this week or anything else that's been going on, then please put those through to me. So number one, just going back to sterling and the moves that we've seen. So the rate increase was as expected, nothing spectacular in that regard. You also have to look at the vote and commentary around it in relation to further interest rates and how hawkish or aggressive the Bank of England is going to be, and the decision by the marketplace, by the forex traders, is that the Fed is likely to remain more aggressive over the next period. That's why we've seen the sell-off. The vote was obviously heavily, so it was a 9-0-0 vote in favour of the rate increase. So there were no dissenters. So I think what you take from that is nobody was looking for a bigger rate increase, as well as nobody was looking for a smaller rate increase. So there seems to be some conformity. Again, there's a positive element to that, but I think one or two dissenters looking for something more aggressive probably would have helped the currency. But the currency has stabled back around this 121 level. It has been below it. I bought at 120.89 on a dip. Did go through my level about 10 or so points. But then we've rallied back to the upside, and I probably didn't benefit from the trade as well as I should have. So just opening up the markets again, and possibly looking for something that we can do ahead of the opening bell. I suppose my real big disappointment today is gold. I stopped out at 1786. It's back down to 1775. I look at the highs. The highs are just about that 1788 level. So I wasn't too far away from staying in that particular trade. I am short at 1774 and a quarter. So we'll continue to monitor that during the afternoon, and hopefully we'll take a bit of the loss that ensued out of that stop back this afternoon. Whilst I've spoken to many people this week who advocate being long gold at these levels and over the last couple of weeks, I still think that the rally that we've seen, if I just widen this out to a half an hour chart, I think the rally that we've seen here, even from 1754, if we go a little bit further back, so if we look at a 4-hourly chart, you can see the rally off about 1680 has been quite significant, and for me Whilst there may not be significant resistance until we get up to this level, which is about 1809, I do think that there's potential for a bit of profit taking, and every time I've been short gold this week in the afternoon, we have tended to see a bit of a sell-off. So I am hoping for something similar during the course of this afternoon as well. We've got about 2.5 minutes to go to the opening bell in New York. The indices are off a little bit. I did try to sell the indices earlier with a couple of sell limits, or a couple of limit sell orders that I put into the market. Unfortunately, neither of those triggered. Had I been a little bit more aggressive, could have taken more than 100 pips off of both of those trades. I think my preference is to be short at these levels. I do worry that there is limited appetite to push this market through 33,000. The jobs number tomorrow will be a big or will dictate a lot about whether that is going to be feasible. Just going to focus on the Dow just for the opening bell and for the sakes of trying to get a trade on. I'm going to put a limit in there just below the lows of what we've seen today. So I'm not looking for anything huge. Something around the 742, 743 level. So I have that buy limit in there. It'll be something that gets triggered on the opening bell or not. And then I think we'll have more of a movement. I do think that over the last couple of days we've seen a decent bit of support when these markets have dipped. I expect that to continue whilst there is continuing talk about the onset of a recession and the technical onset of a recession. There are a number of positives out there at the moment in relation to what's going on with the economy. We do have nearly full employment in the US. There are still jobs being created. Earnings are continuing to be strong. Several companies beating expectations over the last couple of weeks. And there is enough positive to keep this market reasonably buoyant at this particular time. So I'm just going to, one of the things that you do notice over the last few weeks, I've just bought DAX futures there at 13,681. If we do get a bit of an uptick, the DAX often waits for confirmation from the Dow in terms of a movement. If we do get a bit of an uptick in the DAX and in the Dow, could be that we see a decent rally in the DAX initially. So we're seeing a bit of an uptick there. So the markets are open now, and we are seeing the Dow push higher. So unfortunately, my limit's not going to be triggered at this particular point. We are seeing the DAX just up a little bit, not necessarily looking for too much out of that particular trade. Gold continuing around that 1776 level. So I bought DAX at 682. Just see what happens with the Dow over the next couple of minutes. My limit is still in there. Happy to leave it there around the low of today so far, and just see if we do get a trigger. I do think that after 1 or 2 minutes, as we've seen during the earlier part of this week, that the Dow does tend to catch a bit of a bid, whether it's a program trade or something else coming in at that time. But we're pushing up there towards 32,800. Not quite going through it yet. There's a reluctance to pass through at this time, but continuing to hover around there. If I see 10-15 pips out of the DAX trade, I'll probably be inclined to take that. But it's a reasonably calm opening to the US markets today. Trading in quite a narrow range, getting closer to my limit now, trading around 770, but not quite getting there. So I'm going to continue as I am at the moment. The limit bid is in. I've got long DAX, probably 5 or 6 points away from the level that we're currently trading, but reasonably happy with that. And what I'll do is, as I continue to monitor that, I'll update you during the course of this afternoon, and we'll just have a look at the trades for this week. Whilst that stuff is going on, I'll just bring the markets up on my phone. So I have a DAX trade, so 2 open trades at the moment. I'll just key the DAX trade in there, which was a buy. So 2 trades open, 1 DAX which I'm long and gold which I'm short. Those are the 2 trades to be left added into the week. Monday was a particularly poor day. Lost the best part of 500 pips on the day, so a very negative start to the week. So 3, 6, 8 trades, losing trades, versus 5 winning trades, which is not the ratio, or nowhere near the ratio that I'm aiming for. But I've turned it around since then. Tuesday was a good day, didn't quite get all of those losses back, but Wednesday was a perfect day, no losing trades. And then today, bar that gold trade that stopped out, it was a reasonably good day up until that point. Would have been up 400 pips or so without that particular trade, but unfortunately was stopped out there. Lost 158 pips on that particular transaction, and as I've mentioned already, hoping to get some of that back during the course of this afternoon. And we are actually moving towards the entry point. So 2 entry points. The Dow trade has triggered, and we've also we're getting much closer to the entry point on gold from this morning. So adding to my disappointment about the fact that I was stopped out earlier and wasn't able to last through that movement to the upside that we saw in gold. So I'll continue to monitor those trades as we're talking, but so significant turnaround, as I was saying, from Monday, to the extent that we're now up, or I am up 246 points from a losing position of 474 on Monday. Slightly to the good at the moment on closed trades today. That of course could change with the 3 positions that I have open. But a good turnaround from the situation that I found myself in on Monday. So just a Dow trade to add there, of course, now as well. So look, I'll continue to monitor these trades during the course of the afternoon. I don't see any questions coming in that I need to answer. If you do have any questions during the remainder of the afternoon, then please send them through, or over the course of the weekend, and I'll do my utmost to respond to them as quickly as possible. I am in Belfast Saturday and Sunday, so may not be able to get to them if you don't send them through to me today, but I will endeavour to do so. Just in general, in relation to the markets, gold is back at my entry point on the second trade that I did today, I believe it was. So hopefully we'll see a bit of an upturn from there. The Dow is trading at the or around the entry point that I've just entered the Dow in, around 740, and the DAX is slightly above the entry point there. As I said, with the DAX, if I get 10-15 points out of that particular trade, I'll probably be looking to take profit there. The trade that's of interest for me this afternoon is sterling, currently trading at 120.93, as you can see down there in the bottom right hand corner. If we do dip below these levels, I'm definitely an interested buyer. Ideally, as we move towards 120.70, which is the level that we bounced off earlier today, but if we don't get towards those levels, every chance that I'll be a little bit more aggressive in trying to enter that trade. But for the time being, The markets are trading in reasonably narrow ranges, nothing of any outstanding note to mention. I think everybody's eyes are on non-farm payroll tomorrow and what we might see from those numbers. Personally, I'm expecting to see continued strong growth and an outside chance that these markets could rally towards that 33,000 level, and if that is the perceived perception in the marketplace via the jobs report tomorrow, there's every chance that we could move closer during the course of this afternoon session. So things to look out for from my perspective. Sterling is the thing probably of most interest. I am long both DAX and Dow at the moment, so I have some exposure to the indices, but looking to take profit on those in the foreseeable future, just taking profit there on the DAX trade. Thank you very much for joining me this afternoon. Please send questions through if you have any, and I will be back to you on during the course of the afternoon on Telegram. I was going to call it Twitter, but don't know why that popped into my mind.